Good afternoon, everybody. Welcome to Selecting an Option Strategy. I'm Connie Hill, Senior Manager and Education Coach here at Schwab. Happy that you have joined me here today. Last week, we put a focus on what we can look at on the chart to determine if trend has changed and maybe what might give us a clue if it's going to change. Today, we're going to add on to that discussion and go beyond looking at moving averages, looking at higher highs, higher lows. We're going to give two additional indicators that we're going to use to help us identify maybe what that trend might be doing. So hang tight and I will introduce you to what those studies are that we're going to use. Now, I am joined in the chat by Cameron May. I'm happy Cameron's here, fellow coach and trader. He's been in the market for years, okay? And so we bring a little bit of experience. So if you have those questions, go ahead and ask. I'll keep my eye on the chat, but Cameron will have my back if there's some things I can't quite get to. He'll help me out with those questions. If you're listening to this on the recording, I know lots of you do, when you have a question, put it in the comments section of YouTube, and I'll go back and review those throughout the day so that you can get your questions answered pretty quickly here as well. Hope you're following us on X. I'm Connie Hill CS. Cameron is Cameron May CS. He's also put that into the chat so that if you have an X account, you'd like to follow us, like to maybe initiate any communication, we can do it over X. Okay, can't do it over other platforms. Well, let's go through our disclosures and talk about our agenda here today. Options carry a high level of risk and are not suitable for all investors. Our discussion today is for education and information. Don't consider it a recommendation. We're going to be using the Paper Money software application. It is for educational use. I think it's a fantastic tool as you're getting to know Thinkorswim and testing out strategies that might be new to you. Man, use that Paper Money that's available to you. Past performance of any security or strategy does not guarantee future results or success. Want to put in a little plug here for some upcoming workshops and market drive events. All these three happen to be workshops. If you can get close to that area or it's a short plane trip, I'm going to encourage you to go because you're going to love it. You're going to be happy that you took the time to be there. We feed you. We're pretty nice to you when you go to these workshops. And of course, they're free, which is really pretty phenomenal in and of itself. So those are the next three that are coming up right now that are not closed. They do fill up pretty quickly, so if you have any interest, go ahead, sign up. And if you have to cancel it later, cancel it, but at least you're in there, you know, you've got your reservation in there to attend the class. All right. We always want to take a look at market conditions, what's happening. Looks like we had a little bit of a rally here at the end of the day on some of the indices, the SPX and NASDAQ. We like to, after we do our little bit of analysis, we like to look at different strategies and maybe identify where we might want to be going. And then, of course, we're going to be looking at a lot of examples here today. I'm hoping to show you several different examples here today. All right, let's take a quick look at what those strategies are. We've got a list of bullish strategies, bearish strategies, and those that are a little bit more neutral. And you don't have to exclusively stick with those particular strategies. Sometimes it might be a little bit of a mix. In any case, these are the ones that we most often deal with. Now let's take a look. Let's go out to the SPX. Let's get started here. And I will tell you what the two indicators are that we're going to add into our analysis today because they're sitting right here for you to see. We're going to be using the ADX, which is what do we call that? The average directional movement or the average direction indicator. Okay, that X gives us an idea of the strength of whatever the prevailing trend is. It doesn't matter if the trend's bullish or the trend's bearish. It's just going to tell us the strength. A reading of 25 or higher tells us whatever that prominent trend is, that it's strong. Right now, that reading is 31 plus, and so it is over 25. So that would indicate, okay, the trend on the SPX here is, I'm going to say, strong and bearish. If that number increases, say it goes from 30 to 35, then we'd say, okay, it's instead of just a strong trend, we're going to say it's a very strong trend. That advances 5 more points, we're going to say it's a very, very strong trend. Okay, so the higher that number goes, the stronger that strength of the trend is. Now, RSI, relative strength indicator. This is an indicator that we can use for a lot of different purposes. Our purpose here today, we're going to use it to identify bullish and bearish ranges. And I'll tell you right now, we're primarily going to be looking at the bearish ranges. The RSI tends to trade in deep on the market conditions that it has. Okay, so the RSI has a tendency to have certain highs at a point and certain lows at a point in a bullish market, and it tends to have certain highs and certain lows in a bearish market. Now, I am going to copy a couple of things over here in the scratch pad, little notes that we can go back to. So here is going to be a note about the ADX being above 25 to be stronger. And then I'm going to copy over here a bearish range that we might want to look for on the RSI. And so if the range is more bearish, then the highs only get to 55 to 65. Usually don't go beyond that. The lows, we'll just put a little hard return there, kind of dips down to the 20s and 30s when it's in a bearish range. Now let me highlight all of this and make it white, and let's bold it so hopefully you can see that a little bit better. I will, as we go on, I'll throw in the bullish range for you, but primarily right now we're going to be using that bearish range and not the bullish range. All right. What are we seeing here beyond the fact that the SPX is trading, moving along? It had been in a pattern that looked to be kind of like a flag pattern, right? It had this deep drop, and then for more than a couple of weeks, it was just consolidating inside of that flag pattern until Friday. What happened Friday? It broke out of the flag pattern, and therefore a technician looking at this might have thought, hey, this is where we could maybe put on some bearish plays on the SPX or other stocks that maybe look similar to the SPX. Because if we see it on the index, then there's a tendency to see it in the stocks as well. Okay, so that's something for you to keep in mind. What did it do today? Well, it looks like the SPX eked out a little bit of a gain here. Let's see what that says, about 2.21%, so, or 0.38% rather.
I didn't get that.
So a little bit, okay, but not tremendous. All right. What is it doing now? Well, it's kind of bouncing maybe at a support area. But even if we get a support bounce, and even if we have a bullish candle or potential candle like we had yesterday, doesn't necessarily mean that the trend has changed, because quite honestly, what it did yesterday is it put in a low that was equal to the previous low. Some people that are maybe micromanaging the candles might go, oh, the shadow went down a little bit lower, and it did. Okay, but overall, I just probably call that it's doing another equal low, indicating, yeah, the trend hasn't changed that much. Now the ADX, where we talked about it being at 31, so anything above 25 is considered strong trend. Now on the RSI, I copied over here for you though some ranges. And so what we're going to do is look at where the high points have been recently in this bearish flag pattern, okay? So the high here on that day was 44. The next high, 39. Next high, 36.8. Next high, 40. Can you see that they are in this lowish range, right? The highs have not been getting very high. The high here was 49. So it's not even quite to 55, that 55 to 65 range, which means it's even weaker than what the peak points might be in a bearish RSI range. So as we're trying to determine, hey, are we getting a trend change here? What might be going on? One would say, okay, the bearish trend is strong via the ADX, and the range that the RSI is trading in is the bearish range, okay? This most recent low was at 37, which fits in this lows 20 something to 30 something, okay? So it's like, okay, still in a bearish range. Now let's look at it on the NDX here. Similar type thing. We had the market pulling back. It was in the flag pattern, just kind of like it was on the SPX that we were looking at. But Friday, what did it do? It broke down out of that flag pattern. Technician might look at that as a breakout of a flag pattern for doing a bearish type trade and looking for stocks that maybe look similar to that. This one, however, yesterday made a lower low. The SPX, like I told you, was a similar low. This is a lower low, so that just tells us continued bearish pattern, right? Nothing has changed yet. How strong is the trend? It looks like this trend on that ADX is a 31, so significantly above 25, letting us know this bearish trend is strong. And then if we look at the range down here on the RSI, we're going to see something similar like what we saw with the SPX. Now, as I look at the more recent lows through here, let's start right here. This one's 28, which is below the 30 threshold, which is kind of our oversold area. I didn't mention that before. If it's down in this lower range, it kind of gives you the idea, and I'm just going to say 50 or lower, is it's headed down, that things are a little bit more bearish. If it gets to 70 or higher, then that is what we call the oversold area. That basically means the bulls are in control up here. Now, with our readings of the ranges that we're interested in, let's take a look here. So our low here was, well, I told you the other one's 28. This one's 29. This one is 36. This one is 41. So those lows are creeping up a little bit, getting a little bit higher. The high here, the highest it's been more recently is 49. So you look back over here at our range and you're like, yeah, the high isn't even getting to where we see bearish highs. It's even lower than that. And the lows are falling in those 20 to 30 range that give us the idea, okay, it's still continuing in a bearish mode. Now you can use these two indicators not only with indexes, you can use it with individual stocks. And so as we are looking at our stocks today, we're going to incorporate ADX and RSI into the calculation. Now, as you have questions about that, go ahead, chat those into me. Like I said, I will be trying to keep track of the chats there, and Cameron's got my back for some of those things I might miss. All right. Let's use ADX and RSI as we look at recent trades, maybe what we ought to do with recent trades. Last week, we got into Walmart. I'm going to bring up Walmart here. And with Walmart, let's maybe, its pattern that it's had is kind of similar to the overall market, right? Kind of this bullish momentum up until late February, and then starting this pattern of lower lows and lower highs. And then more recently, it's really been stuck pretty sideways. Last week when we were looking at it, and let's just maybe kind of zoom in on this area, we got in on this day. That is the 25th of March, which was the day after our class met. Okay, and so market's closed right now. It was last week as well, so our order didn't go in until the next day. And actually, I believe on this one, maybe it wasn't on this one. One of them we put a buy stop order on. I think it was the other one we're going to take a look at. Now, it's been going sideways here. And when we put this trade on, all we needed the stock to do was to go below 84 and kind of stay there and hang out there. That's what we need to get a max profit area. Well, it really hasn't done that at all. And it was really close to it when we, the day that we got in here. So we definitely need it to move. Now, the question is going to be, it's not been showing a profitable position this whole amount of time. Should we continue to hold on to it? Okay. What can we learn from the ADX? What can we learn from the RSI about the trend? So this trend here, according to the ADX, its current number is 27, but it's been dropping. That's letting us know the strength of the trend is weakening. Back here, it was really strong. Well, it was just starting out in this bearish flag, but then it kind of continued. And when it continues, it's no longer a flag. We'll say, okay, flag done. Right, it's already exceeded what we might see in a flag pattern. Could be a pattern for some consolidation. Could be a pattern that we might see this reverse and go up. So what we're going to do here, we're going to put on a stop. The stop we're going to put on is if it violates tomorrow or the next day or the next, if it goes up above this, what we're going to call 89 area, I would say the range of resistance here might be between, say, 88.5 to 89. So this might be a little bit of a range. And I would say, yeah, today it's definitely in that range. But if we get a move into the 90s on Walmart, we're gonna close it down, because that would indicate that really the trend is reversing there. What are we seeing on the RSI? We're seeing weakness in the downtrend, weakness in that sideways trend, which could mean maybe it's getting ready to change. We don't know. Okay, but we're seeing the strength measurement dropping and dropping, saying, it's not as strong as it was a few days ago. RSI, on the other hand, let's look at it. It had some lows down here, right? It was low. This is a reading of about 33 and 35, 35 again. Next one here's 36.9. And so it looks like it's just starting to kind of creep a little bit out of, maybe it's still in a bearish range, but it looks like maybe it's making a little bit of progress in turning up. Okay, so the high here today is what, 48, which still puts us in a bearish range. But let's pay attention to that direction that it goes and how far it goes. Okay, so right now still saying bearish, but let's go in and protect ourselves. Let's put in that stop. Now it is a long call vertical, or a short. Let me start over. It's a long put vertical, I believe, as we come back over here. Let's go to our option strategies, open up Walmart. Yeah, 85, 84. So you're looking for it to drop below 84 and kind of stay there. All right. When we got into this trade, we paid 41 cents a contract. Right now it's at 14 cents a contract, which does not feel good, right? Because our percentage loss on it's about 65% right now. So that's why if it breaks that technical barrier of price at 90, we just need to shut it down and get out. Okay, so let's go ahead. And we have an order on it right now in our working orders. And let's see, where did our Walmart go here? It's telling us that it is about 15 cents, but let's do a cancel replace order. And let's get rid of that leftover guy. Let's bring this up. And instead of being based on a value of the spread, we're going to put it based on the value of Walmart crossing over into that 90 range. Okay, I'm going to say strictly at 90. So let's do it. We're going to have to change this to a market order because we're going to make it be based on the conditions. We're going to bring this up. We're going to say, okay, if Walmart gets greater than or equal to 90, just shut the trade down. All the contracts. We're not even going to get out of some of them, although I think somebody could justify at this point saying, I'm going to get out of part of them. And then if it exceeds 90, then maybe close the rest. You could scale out of the trade that way. That would be something completely acceptable here. And so we just want to make sure, yeah, it goes greater than 90. Just get us out of the trade. All right. Let's go ahead and hit save. And I'll hit a confirm and send and update our order there. Netflix. That was another trade we got into. So let's take a look at Netflix because it is still going as well. Netflix, we actually did a bullish trade on because it was being quite bullish. NFLX, there we go. In fact, it had made a higher high here, and it really hadn't really dipped very low. I mean, a little dip there and was continuing on up. So as we looked at it that day, it looked like maybe it was crossing above this threshold. And so we did a bullish trade on Netflix, got in here, and it's done nothing that we wanted it to do. Okay. We didn't need a big target. We didn't need it to even move that much when we got into the trade here. We just needed it to go $1,000 or higher on this long call vertical. Well, as you can see, it's gone down, 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 has not done that. Now, the fact that it's in a spread kind of buys us a little time, gives us a little bit of a buffer, okay? One thing I'm noticing technically here is that maybe price-wise, it's kind of maybe finding some support here about the 100-day moving average. And so if it looks like maybe that can provide support, we've got about 17 days left in this trade too. Maybe there's a possibility that it could go up. So it buys us a little bit of time. But let's consult the ADX here. Just trying to make that a little bit bigger so we could see how high it had been. You know, up here when it was bullish, it looks like, you know, that was up in the 39s. More recently, as it was kind of building here, interestingly enough, the ADX is saying the strength of this newly forming trend, what's it doing? It's dropping. The value's down at 17, which says, okay, maybe this bullishness that's attempting to be created isn't really that strong, according to the ADX. And according to the RSI, let's see, this peak here is at 58, and the highs for a bearish RSI are in that 55 to 65 range. So it still falls in to the bearish range there. Okay, so we need to be watching very carefully here to see if, okay, maybe that short bullish trend peters out on us, and it could, depending on what's going on in the overall market, couldn't it? Yeah, it certainly could. Harry would like to know if you can get the workspace that you can import this. I've got a ton of stuff on this. I don't know that I even have this saved as a workspace per se. I've just actually been adding on some things to it today, so it's not going to be current at all. And I've got a bunch of stuff, so it's probably not a good one to share with you. Hari, let me give that some thought if I can create one maybe before we meet together next time that maybe is a little bit more appropriate to share with you. I don't mind sharing this chart whatsoever. Okay, you can go out and build it yourself. I just made the lines a little bit different color and bolder so it would make it easier for us to see here. Okay. We need to put a stop in here. How do we know when we're really wrong? ADX is kind of indicating we might be wrong. RSI is dropping, and so as it drops, that's letting us know the momentum is starting to drop down. I think what we ought to do here is put in a stop value. Let me just zoom in here a little bit. Friday, we had, well, actually, this is Monday. Monday, we had a little bit of a hammer looking like candle, right? That's where it has a small body and a longer shadow. That longer shadow, we want it to be twice as long as the height of the body. And I would say it's not quite twice that length. So it's not really a perfect hammer, but I'm going to say it was hammerish and could have indicated a reversal here today. And, you know, it really ended up being down a little bit, 0.45%, which is not much. So, yeah, like I said, it could be bouncing there. But let's do this. If it gets lower than yesterday's low, where the bears pushed it down to, yeah, if it gets lower than that, we probably ought to close the trade out. So yesterday's low was $900.59. Let's go ahead and change and put in a stop at $900.39. Okay, $900.35. So let's go in. We'll go into our working orders and let's find Netflix here, make a change on it. We were trying to get out, you know, if the stock cooperated, and technically we could put on an OCO order. We could keep our 463 as our target, and we could add on our stop based going upon that lower. So let's actually do that. I'm going to make a note here, 463. Technically, we cannot take this order and change it to an OCO order. We have to set it up again. Okay, so let's go ahead and delete this. That's why I wanted to take note of this. 463 is kind of our profit target. Let's come back out here and let's just delete this altogether. We'll cancel that order. And then kind of to make it quicker to set up, I'm going to come down here to Netflix and I'm going to say create duplicate order, okay, to get us started. We'll change this to a first triggers. Oh, well, not first triggers. We're just going to go OCO. The order's already in, so we're going to do a top order of profit taking here at 463, and then we're going to put in that lower condition. So we're going to create a duplicate order here, but we're changing it. We're going to make it a market order. Going to come out here to the gear. We're going to be making it based on the low of Netflix. Let's see if I wrote that down in my notes. 939 cents. Okay, so we'll come down to this bottom and we're going to make it be based on the price. And let's have that be going, I think we'll leave it here, $900.39. Pop that in there. Let's make sure our less than or equal is going the right way. So less than or equal to 90 939. That would mean this thing's starting to drop a little bit, and we've got on a bullish trade. It's going past the lower boundary that we saw yesterday. If it continues down that vein, we just want to get out. Okay. So this one we've changed to an OCO, and actually I could go back to our previous order. I'll do that after our class, put back in that target, put in the stop that we just put in there so that we have two OCO orders working. All right. Any questions on that? If so, chat them in. Let's go ahead. We've got 4 contracts there. Let's send it off. If it disappoints us, we want to be out. If things change in the market, it's that 100-day moving average, maybe it'll go to our target that we wanted it to go to in the first place. So we shall see. Now, let's continue down this path of using ADI or ADX and RSI to help us identify trend continuations or trend reversals. Okay, so far we've been seeing some indicators with the ADX and the bearish ranges on the RSI just to a lot of bearishness. Now I'm going to share with you for your purposes. We're not going to necessarily refer to it much here today, but if you want to know what are the corresponding bullish ranges on the RSI for the highs and the lows. So let me copy that over, and maybe I'll do what I did here. I'm going to put in a hard return here because the bullish range says, all right, the highs typically are going to be in the 80s and 90s, possibly higher. And the lows are in the 40s and 50s, which is quite a bit lower than the 20 to 30 range here. Okay, so obviously helpful to use in different market conditions. All right, that's for your reference. Although we're kind of focusing on bearishness because that's what our indicators and our charts are really pointing to. We'll see if we get a little bit of a bounce. News keeps coming out, right? Every single day, a little bit different news story coming on board. Now, I want to share with you, and I hope all of you have this available to you. Some of you may not, but it's something that I like to look at every day. And what we have here is a grid with the major sectors. This is the energy sector, materials, industrials, and so forth. And one of the things I like to do is just kind of get a quick snapshot. Is there anything looking stronger bullishly? Is there anything looking stronger bearishly? Now, one that was kind of standing out to me over here was the healthcare sector. Okay, the sector having tried to rally, but it didn't go higher than it was previously. So lower high, lower low, and today kind of quite a bearish candle here today. It's not totally eclipsing the green candle, but its body actually went lower and closed lower today. So this certainly is a bearish candle going along with the trend. Now we could take that code, and I'm just going to copy it over. Let me do a quick copy and then let me share the grid with you. Okay, actually, maybe I'll share the grid first. Let's say share grid. I will put this out in the chat for those of you that are here live. If you want to, I just know what that ticker symbol is. Oh, wait. It's not the ticker symbol. It's actually the URL for the grid. Let's do share. There's the URL. Now I can paste it in here. Remember, anytime we share a link with you, it's never guaranteed as to accuracy or timing. Okay, but could be something that could be helpful to you. Now, come back here. I want to make sure I really shared the right thing with you because it went back to Netflix, which, okay, I guess I did. It just kind of goes back to Netflix for whatever reason. I was concerned that maybe I had hit share on Netflix, but not really. If one of you wants to test out that grid, let me know. If it's working properly, feel free to do so. But what I decided to do was maybe focus on some trades in the healthcare sector, kind of like picking on a loser to continue to lose, while the overall markets are showing us some bearishness, even though we had a little bit of a rally here at the end of the day on the SPX and the NDX. Okay, let's do this. We're going to minimize this. I'm going to look at some stocks in the bearish sector. What I was thinking to do is I was going to, let me come back to that grid. I'm going to copy the energy sector. And just for the fun of it, we're going to look and see where the ADX is and the RSI on that sector code. Those of you maybe that aren't familiar with those codes, you can get the sector codes. It's a public watch list. You come over here to, I'll just go to Market Watch real quick here. If you come over to quotes and come down to public, and it's going to be called S&P 500 sector indices. And that will show you that whole list of sectors that make up that grid. That's where those codes came from. Now, what I wanted to do here is pop in for healthcare. And let's just kind of see what these indicators are showing. So we've already seen the trend starting with some bearishness. It's below the 200-day moving average here. It's below the 30, which is the red one. It's below the 10, which is this blue one. The one that it's not below is this gray one, which is a 100-day moving average. That's kind of interesting. Today, it looks like it's barely closing below us. Okay, so looking at that, okay, ADX. What is it showing us here? Let's see, the value today right now is 12.69. What is that telling us? It's telling us that the energy sector, that the strength of the trend is not that strong. So even though it might be a little bit bearish here, it's not like it's dropping off a cliff. If it were dropping off a cliff, would be seeing this ADX line be going up and showing really strong trend strength or weakness in this strength of the weak trend. Let's put it that way. Let's look at the RSI here. Now, this low here was 39. So it barely stays in the bearish range for the lows, right? The 20s to 30s, it's a 30. Next low after that, well, this one actually went a little bit higher. It was 49, but then it's dropping down again. Here we've got, looks like 44, looks like 43.98, and then today it looks like it's at 40.77. So these low points are going a little bit beyond the 20s to 30s. They're starting to creep up into the 40s. Okay, they're not all the way to a bullish low range. Well, actually they are. They could be transitioning here, but we're going to look at it more bearishly. We should keep an eye on that to see if RSI continues to pop up. To me, it was just like looking like the high points here kept getting a little bit lower. The low points here on the RSI continuing to get lower. Okay, right now moving back down into the bearish range. All right, very good. Looking at that other one, looks like Trader says it looks like we're stuck in a market up down. Yeah, very well could be. James, thank you for the feedback. That grid worked out for you. Perfect. Happy that's the case. Let's take a look at first stock at to be and J had some negative news today that impacted their company. We can see this giant bearish candle that basically gapped down below a range that it had been trading in since February, right? It went way down below the 200-day, a tiny bit below the 100-day moving average. But what really stands out is that RSI, it had been at 61, a bullish range pop, or rather drop here, down to where it closed here at 32.61. Okay, definitely into the bearish range instead of the bullish range. And it really was a pretty strong candle. You can see the volume moving in here for some selling off conditions. I didn't read a lot into the article, but what I gathered was they were proposing a bankruptcy settlement, and the judge said, nope, you can't do that. So that's why the big bearish news and the selling off activity. Now, the ADX yesterday was at 25, so the strength had been declining, but still above 25. But you get the idea. Gee, that trend maybe is dropping here. And it did drop a little bit more. It's still at a 25. This was 25.2. And here at the end of the day, well, here at the end of the day was 25.2. Yesterday it was 25.05. Okay. So barely in the strength good strength versus pulling back here. Now on J&J, let's take a look here. Well, I'm going to actually do this instead. I want to go back to our strategies. Now that we've kind of done a lot of analysis, I think we ought to stay in the bear strategies column. And for today, to be a little bit more conservative and not require moves in the stock, we're going to look for some short call verticals. Now in J&J, it has some weeklies, and the May seconds have enough liquidity here out in the open interest to consider using it. We can see thousands and hundreds here, which we love to see. Now, I was looking at here initially, we'll see if this still looks good here. May 2nd, let's see, I was looking at, this is a 35 delta at the 157.50. I had been looking a little bit lower than that. I had been looking at the 160. It may have moved down enough that maybe we should consider selling a 30 something. So let's target this one, 157.50. Would want the stock to stay below. Right now it's at 153. So there's some room for it to move up if it does, right? We'd be able to see that there's a little bit of area that it can fluctuate in and still have the trade work out okay, or even still go against us. So let's go ahead. We're going to sell our vertical. And this might fluctuate a little bit here. I'm going to go ahead and lock the price in. Technically 157.50. Let's see where that puts it. That's about where my mouse is right there. So kind of a little bit above the midpoint of that candle. And sometimes the midpoint will act as a resistance when a candle is down below it or price is below it. So that'll be interesting to watch. As far as our process goes, we've identified we're going to do a short call vertical. Let's see if the return is good enough. Okay, if it meets our criteria to say, yeah, let's do that. So let's take a $2.50 wide spread minus 73 cents. That's going to give us a value of 177. I'm just going to write this down here. That would be our max theoretical loss, right? Could be 177 to gain $73 or 73 cents, $73 per contract. Okay. Let's see what that percentage equates to. Let's take our max gain, 0.73, divide that by our theoretical max loss, 177. That gives us about a 41% return. Now, some people might go, that's nice, but maybe I'd rather be more conservative and sell further out of the money and have a little bit lower return. That's completely feasible. For our purposes here today, we're going to keep it. We don't want to risk typically a ton in this class. So let's today, our general, we try to keep it below $1,500. Let's just go $1,000 today. So $1,000 today would allow us to do what? We could do 5 contracts. Okay, 5 times 177 max loss would be less than $1,000, and that's where we'd want to keep it. Let's just do a first trigger sequential, and let's just put in the exit order if it does what we think it's going to do. Okay, meaning we're not going to put in a stop site to it. We're just going to put an exit if we get a chunk of 73 cents. Today, on the 73 cents, let's go for 70%. When we have 70%, we only have 30% left. So that value comes in at 21. Some people might make it go to 22. Let's create a duplicate order here. We're going to change this. We're going to put this at, it's going to be, let me look here real quick. We should have this at 0.21. If it gets that low, we've been able to receive the majority, 70% majority of that 73 cents. We want to make this good till canceled. And the condition is there right now. We don't necessarily need to make it contingent. If you wanted to, you could. We're just going to go ahead and send this off and make sure our max loss is 2,000. Oh, I must have done some poor calculating there. I was thinking it would stay below 1,000. Let's take our contracts back here then. Let's only do 2 contracts. Make sure those match up. And we will send these off Now this is saying 812, so yeah, we're not going to exceed the $1,000. Let's go ahead and send that back. Send it on in. Just doing a quick look here to see. All right, we're going to go ahead and send it on. I think I may have made a miscalculation in terms of our position sizing initially. So we're going to just stick with the 2 contracts. We don't want to risk more than the $1,000. Okay, I want to get another trade on here as we're kind of wrapping up some details here. I'm going to go through it a little bit more quickly, but I want to make sure all of you are subscribers to our Trader Talk channel. It just makes it so much easier for you to find our content. I just kind of show you here real quick. If you are a Trader Talk subscriber, you see our channel here, you can go in, you can put in different watch lists. You can see what's coming up. We can see what some of the more popular videos have been. So it just makes it really easy for you. Click on that little icon in the bottom right-hand corner, and that'll subscribe you. Just do it once. If you click on it again, it will unsubscribe you. So we don't want to have that. Okay, next trade we're going to look at here. And we're going to do this, like I said, pretty quick. We're going to do Merck. We're picking on healthcare. We're going to pick on another pharmaceutical. This particular one looks like, you know, maybe this was a support-ish area. Looks like maybe it's finally breaking through there. I see earnings are coming up. We're going to want to get out before earnings, unless you specifically like to trade over earnings. ATR, what is it, Sean? 19, saying this, whatever this trend is, sideways is getting kind of weak. But the RSI is dropping, and it's been down here in that bearish range. Okay, therefore, we're going to continue on our vein of some bearishness. Now, in this one, we can actually do, we're going to do 24 days worth of time, so a little bit shorter time frame here. And if we're doing a small number of contracts, there's enough open interest here. If you're somebody that does a lot of contracts, then it might not be sufficient for you. Here, I was looking to do, let's see how this maps out right now, the 92.93. So we're just going to say sell vertical. It's a buck wide, and it's going to give us about 27 cents. So 0.27. Max gain divided by what? 0.73, max theoretical loss. It's got a 36% return. So some people might feel quite comfortable with that. Now this needs to be sell. This number, okay, it's going to be a little bit less than 36%. Might come down here to 34%. But many people just going to feel comfortable with that. All right. Again, let's do 2 contracts. Let's do a first trigger sequential. When we get a chunk of the 26, let's again go with 70%. So let's say 26 times 0.3. Let's go buy it back at 7 cents. So we're going to create an opposite order. We're going to go buy it back at 7 cents here. And I was thinking something here. Let's go ahead and send this in. We'll want the system to just buy it back for us. Let's go put it in our option strategies bucket. Send this on. I had a thought here that I think I need to redo this J&J order. Somehow it slipped to a credit spread order here. It really needs to be a debit spread. So I'm just going to do a cancel replace here real quick. And we're going to change it so that it's a buying back order. All right. And the value on that was going to be, let me think if I can remember here. I think it was 9 cents. If it's not 9 cents, I'll go back and fix it. But I think it was close to 9 cents. We need that to be a debit order, not a credit order. So just notice that went in a little bit different. It's not going to want to fill me at this. I'm going to go back and fix the order. I'll start it over all again. If we had time to do it in our class, I'd walk through all the steps with you. But essentially what we're going to do is we will still do this J&J order. Looks like we were going to buy it back at 21 cents here. Okay, so what I've got to do is cancel this order altogether, then go ahead, submit it with a 73-cent credit, which is what its going rate is. Put this in as a debit order at 21 cents, but I'll have to start it all over. Okay. All right. Well, I'm glad I noticed that before we finished up. I wouldn't want you to have confusion on that particular issue. Now, I don't see a survey out here today. If there is, Cameron will post it again, but I don't think There is one, and you took it pretty easy on Cameron today, which is good. Doesn't look like there were a lot of questions as far as what we're looking at. So very good, you guys. What I want you to do, practice adding ADX and RSI to your charts, the ones that you take a look at, and see if that helps you further in your technical analysis. See if it helps you identify maybe when we're switching trends, because that's what we're looking for right now. All right, you guys, last class of the day. We'll see you bright and early tomorrow morning with Trader Talks right at the opening bell. We'll see you then. Bye-bye.